Hey, what's good, guys? It's me, T.Mayne, back again with another awesome video, guys. And in today's one, we're going to be getting into fractal setups. Now, we're going to keep it as jam-packed, as educational as possible. So aside from just discussing what fractal setups are, guys, we're going to go through the foundational elements of our fractal setups to understand exactly what we mean by the term or by the concept fractal setup. I'll also discuss to you guys why we use this concept and why this concept, guys, can basically add, number one, confluence to your setups and help you guys manage risk. So if you guys are not subscribed to the channel yet, I'm gonna give you guys an opportunity to go and hit the subscribe button while we run the intro. Now, guys, we're going to get started with our fractal setups. So let's discuss first of all what we mean by fractal setups. So our word obviously includes, or rather our concept includes two words, fractal, and we'll discuss fractal basically meaning that, or rather by us going into fractal, what we need to discuss is just the concept that basically market is fractal, and what happens on bigger time frames also happens on smaller time frames. And I have a nice small cut out of some price action just so that we can iterate this concept of what we mean by fractal. So I have a piece of price action here, and I have a question for you guys as well. What time frame do you guys think this piece of price action is from? Now, straight off the bat, honestly, no one would be able to answer this question as to which time frame this piece of price action has been taken from. Why? Because the same nature that we see happening, for example, maybe if we call this the 4-hour time frame, the same price action and the same nature that we see happening on the 4-hour time frame also happens on lower time frames and as well as on higher time frames. So without someone telling you what time frame this piece of price action is, you'll never really know what time frame this piece of price action is. So the nature that occurs on one time frame occurs on every other time frame. And so with us mentioning that, now we bring in sort of an importance of us understanding basically, or rather going into and being specific about the time frames that we're looking at. Why? Because we're going to be deriving, or we're going to be taking different pieces of information from different time frames. Maybe we can say that as we're taking these pieces of information from these different time frames, we're going to prioritize, or rather add more value to our higher time frame structures and our higher time frame pieces of confluence, and our lower time frame structures and pieces of confluences are there for these two main reasons: to add confluence to our position and to help us manage our risk. Now, when we speak about setups, guys, now that we're onto setups, or rather, let's just say setups directly implies our analysis process. So the fact that we are looking for something fractal and we are going to be looking for this fractal thing in our analysis process means that we should be incorporating this idea of fractal setups within our analysis process. So this is how we're going to analyze. We're going to use basically our higher time frames, our lower time frames, and we're going to observe for fractal nature. Now let's get into, guys, what our fractal setups are and basically how we're going to use this to do these two things: add confluence and manage risk. Now, like we mentioned before, if I had to ask you guys which time frame do you guys feel like this level, this structure is, no one would know. No one would ever have an accurate answer. Now we're gonna just, for the sake of this example, say that we are looking at maybe the daily time frame. So this is our daily structure. On our daily time frame, guys, we have a beautiful impulse to the downside. We also have some nice structure over here. Excuse me, guys, sorry about that. We also have some nice structure. Okay, wow, that was unexpected, but nonetheless, we also have some nice structure over here developing as we are making this move to the downside. We then see a beautiful corrective structure coming into our previous resistance areas that prices established before violating some lower structure. So we have a nice beautiful setup that we're looking for, and prices are right now in our area of value. Prices are in or rather we can say at our resistance. We're at our third touch trend line. Now that we're at our basically our important high time frame structure areas, our points of interest, we need to be dropping down onto those lower time frames. Now, what are we looking for on our lower time frames? What we're looking for, and I guess this will drive the concept and drive the idea that one setup is enough, guys. One setup is enough. So what we're looking for is exactly what we see here. Now that we're in our zone of confluence on our daily time frame, this is the piece of structure that we're trading. This is the way that we trade. Maybe regardless of whether we are trading support and resistance, we're support and resistance traders, or whether we're these trend line traders, or whatever the case is, what we're looking for on our lower time frame is exactly the same piece of structure that we have on our higher time frame. So on our lower time frame, in this small piece of price action in our zone, what we're looking for is for prices to push to the downside, give us momentum, maybe create some structure, maybe break some structure, or whatever the case is, doesn't really matter. But we're looking for an exact same setup as we see on those higher time frames. That momentum to the downside, followed by that corrective structure that puts us into an area of value on our lower time frames. This simply, guys, is the idea of fractal setups. Now we're going to speak about how does this fractal setup, or how does the idea of a fractal setup allow us to do the first thing, which is add confluence. So now we have, I guess we can say we have the confluence of our higher time frame structure giving us momentum to the downside, breaking structure, coming back to retest correctively. We also have the exact same confluence on our smaller time frame. If this is our entry time frame, perfect. So also on our lower time frames, guys, we have that confluence of prices giving us momentum in the direction where we're looking to trade that higher time frame momentum. We're also getting the confluence of already seeing the market react from our higher time frame resistance. And then I guess we have the whole confluence of our corrective structures pulling into some previous resistance areas. Guys, imagine the amount of confluences that you have on this trade with this simple idea of just fractal setups. Now, how this allows us to manage risk, guys, is that if we were taking this setup on our higher time frames, we'd obviously be looking to maybe, let's just say we're looking for those risk entries and we're looking to execute and find candlestick confirmation at our third touch region. Where would our stop loss have to be? Our stop loss would have to be above the structure that we are retesting. That's the safest area. Where do our targets need to be? At the 90% rule, which is there where our structure begins. So we know where our stop loss is, and we can definitely calculate that from this area to this area here, and as well taking into account that we're on a higher time frame, guys, our stop loss range will be quite big. Now, once we've basically looked into this idea of fractal setups, and we've seen that exact same replica on a smaller time frame, where does our stop loss have to be? Our stop loss has to be above the level of structure that we are retesting. Even to be safe, guys, you can still put your stop loss above where the initial momentum came in. And even this range in terms of our stops, guys, that range is still a much smaller range than this range over here on our higher time frame, looking for this third touch structure. So guys, we are able to add the confluence because we understand that this setup that we are taking, there is a nature that is involved in the setup, regardless of whether or not we are taking those fancy things like order block entries. Even if we were taking an order block entry, and we'll make this example, guys, just so that we really honestly drive this point, so that we understand that the whole idea behind fractal setups is for us to add confluence and manage risk. So even if we were in this nice bearish rally, and we found this nice bearish order block and prices came into this area, what are we looking for on a smaller time frame? On a smaller time frame, we're expecting prices to obviously react from this bearish order block. So what are we expecting here on a smaller time frame? On a smaller time frame, guys, we're expecting, and our entry will only come once we see prices creating a new order block or a new level of structure and then we see prices coming back to give us that entry in our new level of structure for that move to the downside. So the exact same reasons that qualified and that gave us opportunity in this market on a higher time frame should be the exact same reasons that qualify and give us opportunity to capitalize on the same setup on a lower time frame. What the advantage is that now we have confluence. If our story is that we're expecting a mitigation of this bearish order block, we should be expecting, and our story on those lower time frames should be also that now that we've mitigated this larger area on a higher time frame, on a lower time frame we expect that the momentum that comes out of this area will in itself create further zones that need to be mitigated before prices actually make that move to the downside. So we've added the confluence, and now that we have that smaller time frame entry, our stop loss can be much more refined, and yet we can still take higher time frame targets to do, obviously, or rather I was gonna say, to maximize on those rewards. So even in this case, guys, we're still taking this setup all the way to the 90% rule. We're still looking at that higher time frame target area, but our risk has been managed. Now we have the opportunity to capitalize on a trade with the exact same entry areas, but our risk to reward ratio on this exact same position will be exponential compared to the risk to reward ratio that we would have had if we had executed this trade on a higher time frame based off this higher time frame structure. Now guys, I do have a last example for you guys, and I wanted to just include people that are trading things like simple break and retest of structure. So for a nice break and retest of structure example, guys, I've drawn out this young double top structure over here just so that we can get a nice bearish example. Let's obviously put our nice zone of interest. So we're on a higher time frame. We're on, let's just say, maybe the weekly time frame. So we're on the weekly time frame, a nice big high time frame, and on the weekly, guys, we've seen a nice double top structure, a nice break of our previous support structures, and prices are in our area of value on that lower time frame. Now it doesn't really matter what that lower time frame is, but let's just say for this example that lower time frame in our case is the 1 hour chart. Now on the 1 hour, what are we expecting? We're expecting that the higher time frames will react from this level of resistance. For us to be able to add confluence on our trade, we know that the nature of this double top that we're trading higher time frame simply means that buyers were in control. Buyers failed to push prices above previous areas where sellers came in from. Sellers took over and were able to violate previous support structures. That exact same song that we've sung on our higher time frame, we sing that song on our lower time frame. On our lower time frame, to refine our entry, instead of now having a weekly stop loss, because yes, we are still executing in the exact same area, but to trade that double top, we know that our weekly stop loss will have to be above our swing highs, which is above the double top structure over here. What we're doing is, now that we're on the H1 chart on that smaller time frame, we're looking for the exact same thing, because we know in this move to the upside there is a nice beautiful uptrend on our H1. What we're waiting for is the same thing, a nice double top structure, or buyers failing to push prices higher, sellers coming into control, violating previous support structures, and then we take in our entry after we've seen our fractal setup. So the exact same cause, or the exact same reason, and the exact same nature that we observe on that higher time frame, we're looking for that exact same nature of price action to occur in a lower time frame point of interest, a lower time frame, higher time frame point of interest. Hopefully that makes sense, because we're in a higher time frame point of interest, but we're looking for that lower time frame confirmation. So now that we've observed that, guys, now that we're taking this entry on a lower time frame, we know that our stops are going to have to be above our double top to be safest in this area, and still our entries are in the exact same area, still within our higher time frame resistance area where we're expecting the market to react from. So all we've done, guys, just by using this simple concept of fractal setups, we've added confluence to our positions. Adding confluence also adds that confidence for you when you're taking that setup. Adding confluence also adds those probabilities on your side, guys. And then, as well as adding that confluence, we were able to manage risk. So we are able to take a smaller risk on the exact same setup for the same winning potential. And obviously, a smaller risk on the setup means that we are maximizing on bigger returns with the exact same movement that we were expecting of our higher time frame structure. Guys, hopefully you guys have received the value that was intended for you guys in this YouTube video. If you've received the value, definitely drop this video a like, guys. I will appreciate it. It will show me that I am spreading the value that I am intending. Otherwise, don't forget to subscribe, guys. This is T.Mayne, your FX Chasers mentor. I will see you guys in our future videos. Have a good week, guys. Cheers.